Okay, good morning once again, class. Today we continue our discussion on preparing the statement of cash flows. Let's have a quick review of what we have done so far. Okay, we said that in preparing the statement of cash flows, we can use a template so that when we have the final output already, it will be easy for us. And I don't recall informing you or telling you that there are two methods in preparing the statement of cash flows. We have the direct method and the indirect method. Okay, what we're doing is the indirect method, where we look at the individual accounts in the balance sheet and then identify whether the changes in the balance sheet has an effect on cash, either as operating, investing, and financing. So very quickly, we start with the net income after tax and add back depreciation and amortization because we would want to convert the net income after tax into cash, because net income after tax is not equal to cash. So that's why we had to add back any non-cash expense, which is depreciation and amortization. Okay, so we took charge of this. We took cognizance of this, and then we went through the accounts in the balance sheet. Okay, so we said that the general rule is that if assets increase, it's a use of cash, and if they decrease, it's a source of cash. On the other hand, for liabilities and equity, any increase in liabilities and equity is a source of cash, and any decrease is a use of cash. So cash and cash, we're investigating what happened to our cash account. From 80,000, it became 10,000, which means that there was a drop of 70,000. And as we said, the template that we're doing should also reflect this decrease of 70,000. Okay. All right. So quickly, short-term investment will fall under financing because this is interest bearing. Okay. And the asset increased from 3.6 to 3.8, which means it's a use of cash. Okay. So here it's negative 0.2. It's a use of cash under financing. On the other hand, increase in accounts receivable falls under operating activities. So receivables increased from 311 to 371, which means it's a use of cash, 60, the difference between these two. Also inventories increased from 415 to 615, and any change in inventories will fall under operating. So it's a use of cash. Also, net plant and equipment increased from 870 to 1,000. It's also a use of cash, and it falls under investing. For the other accounts here, for liabilities and equity, accounts payable increased. When liabilities increase, it's a source of cash. Accounts payable falls under operating activities. So this is source of cash of 30. That's why it's positive. Same thing with accruals. It also increased by 10. So it's a source of cash under operating. Notes payable, since it's interest bearing, it will fall under, notes payable will fall under in financing activity. Okay. And since it increased from 60 to 110, then this is a source of cash. Same thing with long-term bonds from 580 to 750, interest-bearing instrument. So it falls under financing, and then it's a source of cash. If common stock increases, if there's a change in common stock, then it will also form part of financing. I just indicated this, even if there was no change, just as a discussion point. And we said that we only captured up to net income after tax, right? up to this point, this one. So we have not reflected in our template any change in cash after the net income after tax. There was this dividends distributed. So these are cash dividends. So this should be included in our template of for the statement of cash flows. So the company issued 77.1 cash dividends. So this should form part of financing. Okay, payment of dividends 77.1. All right. So those are the accounts that changed from 2020 to 2021. And when we added the operating activities, investing and financing activities, total them, we got 30. Which means that we are overstated by 100. Okay, because our value is 30, when in fact it should be negative 70. So we are overstated by 100. We should decrease this by 100 so that this becomes negative 70. However, we said that 100 seems to be, there's only one 100 here, and that's the depreciation and amortization. And I said, if we delete this, okay, then our balance will now be okay. However, we said that this is wrong because net income after tax is not equal to cash. So that's why we have to adjust it really by adding back depreciation and amortization. So where is the mistake here? Okay, where is the discrepancy here? Okay, so the discrepancy lies in your fixed asset, net plant and equipment. This one. This is where the discrepancy lies. Okay, let me discuss further. Okay, what we did here in net plant and equipment was to subtract, to get the difference between 1,000 and 870. And we concluded that this was the additional investment in PPE, in property, plant, and equipment. However, take a look at this. The word net here indicates something. So what do we mean when we say net? Class? What's the implication of the word net here? Let me just use another worksheet. So when we say net, class, what do we mean? Anyone? What do we mean by net? What's the implication of if we have that word net there? Any idea, please? Can somebody explain what's the meaning of net there? Anyone? When accountants record any investment in property, plant, and equipment, okay, they record it at cost. So which means whatever amount was spent. Okay. All right. Purchase. Class, when you share your answer, kindly share it to everyone. However, class, how do you get net? If you recall from your accounting, what happens? You deduct this with what? You deduct this with, anyone please? What do you do with property, plant, and equipment at cost? You subtract what? To get your net. net property, plant, and equipment. What do you subtract here? What can you recall from your accounting class? Expenses. Bakit expenses? Okay, depreciation ba, Gerard? Is it depreciation expense or what? Depreciation, if it's expense, property, plant, and equipment is a balance sheet account. So we don't put expenses in the balance sheet, right? All the expenses fall under the income statement. So what's deducted, class? If you recall from your accounting, less what? Less what? I'll give you a clue here. That's the clue. What's this, class? You don't recall from your accounting class? Allowance discount. Allowance is not used for property, plant, and equipment. Allowance is used for sales, okay, or for for purchases, okay. Or if you're selling, you have sales discount. This is what? This is okay, class. This is your accumulated depreciation, diba? So from your property, plant, and equipment, you subtract your accumulated depreciation, which is what we call a contra asset account. So every year this accumulates. You add every year the depreciation expense, and then you get your net property, plant, and equipment. So what does this mean? If you want to get the actual investment in property, plant, and equipment, you should not use the net PPE, because the net PPE you cannot get the actual cost of the investment in property, plant, and equipment in net PPE. Okay, so therefore we have to compute what was the actual investment in your property, plant, and equipment. Okay, so let me go here. Okay, so let's trace the flow. Okay, let's trace the flow of your net property, plant, and equipment. So let me write here net PPE at the beginning of the year. Okay, so your net, if you're given the property, plant, and equipment at cost and not the net, okay, if that's the one given, then no problem. Whatever the difference is in your accounts, in your balance sheet accounts, will be the actual investment. Okay. However, this is not PPE at cost. Okay, let me repeat that. Had we been given the property, plant, and equipment at cost, okay, then we just subtract the difference, put it under investing, and then that's already the correct answer. But here, what we're given is the net property, plant, and equipment. So that's why it's giving us the wrong. This is not what was invested. Okay, so let's trace what was invested. So let's do an accounting method here. Okay, so what will affect your, if you recall, class, from your accounting, we'll just make use of the accounting the account here, net PPE. So this is the beginning value, right? And what will change your net PPE? So here, if we acquire new assets, so this is acquisition. Okay, we add the value here in your debit side. And then if the company sells of its property, plant, and equipment, it will fall under your credit side, disposal. And then also, for your net PPE, you also subtract your depreciation. And this is basic accounting. You will now have your ending balance sheet. Okay, so this in a nutshell is the flows to your net plant and equipment. So we have your beginning, and then we add any acquisition. This is what we want. This is what we want to know. How much was invested? How much new PPE was acquired by the company? Okay, so because when we record here 130 here, we're getting the wrong answer. This is the wrong answer. Okay, so we have to adjust it. And then we subtract the disposal, subtract depreciation to get your ending net PPE. Okay, so let's write it here. So net PPE, and then we add any acquisition. Okay, and then we subtract any disposal or depreciation first, and then disposal to get your net PPE at the end. Okay, so this is what we need to compute in order to find this is what we want. How much was really acquired? How much was invested in property, plant, and equipment? Okay, so let's take a look at our data. We have net PPE beginning. Okay, so we have that information. Net PPE beginning is 870. And we also know net PPE end at 1,000. So let's fill this up. So net PPE beginning is 870. Okay. Acquisition, we don't know. This is what we want to solve. Depreciation is, so this is to be subtracted, right? If I take a look at the T account, you subtract depreciation. You subtract it from the PPE. So I'll make this negative 100 depreciation for put negative here. Disposal. Okay. Do we have any information about the company selling part of its property, plant, and equipment assets? Okay, no. There's no information to that. But if there was, then this should also be a negative because this will reduce the value of your PPE. So this is 0. Okay. All right. So now, what will be our net PPE end? We will just sum this up. 870 plus acquisition plus depreciation plus disposal. Why plus? Because depreciation is already in negative sign. So let me just sum this up. All right. It turns out now that your net PPE is 770. But is this the correct balance, class? May I ask you, please, kindly chat, if 770 is the correct balance of net PPE, property, plant, and equipment. Waiting for your chat, please. If this is the correct balance. Okay, how about the rest? Thank you, Gerard. Let's see the answers of your classmates. Here in this computation, okay, what did we do here? We are plotting, we're trying to see the movement of your net PPE. In the beginning, it was 870. And then what changes do we have in the net PPE? Acquisition. This is what was bought by the company. And then we have depreciation and then disposal. depreciation and disposal are reductions in net PPE. So that's why if you take a look at depreciation, I put negative there. Disposal, there's no information about the company selling off its capital assets, property, plant, and equipment. And so if I combine everything, if I add everything, I have now your net PPE. And so my question is this the correct balance of your net PPE? Okay, how about the others? I'm waiting for your answers, please. Okay, let's see some more responses from your classmates. How about the others, please? Only 5 responded so far out of 20. Okay, thank you. More responses, please. I'd like to see your answers, class, please. So how about the 7 others? No, not 7, the 13 others. Okay, let's see. Diana, why no? Diana, could you please unmute yourself?
Hello, sir. Can I
Yes.
be heard?
Why
Okay.
is your answer no?
I think it's because the net income. I mean the net plant and property equipment is like there's no, the acquisition is incomplete, I think.
Complete. But my question is this the correct ending amount? 770. What should be the correct ending amount?
think-
Take a look at your balance sheet. What should be the ending amount? It's there.
It should be it should be 870 po.
870 is the beginning.
I mean 1,000 po.
Oh, 1,000 siya. Thank you so much. Thank you, Diana. You're correct, no? So you're correct, class. This is the wrong balance. The balance should be 1,000. Okay, based on the balance sheet. Okay, the ending balance is net PPE. It's 1,000. Okay, but here we have 770. So definitely, this is wrong. Why is this wrong? Because you don't have yet here the value of the acquisition. Okay, but you can guess already, no? What should be the value of acquisition? What do you think, class? You're lacking here by how much? What should be the acquisition so that the ending will be 1,000 and not 770? Kindly chat your answers, please. That's very easy. You know what's lacking, so that should account for the. Yeah, thank you, Patricia. Yeah, thank you, guys. Yeah, you're correct. So you're correct, guys. If this was 230, okay, 230, then we have the correct balance. So this indicates that the company acquired assets worth 230 and not 130. Okay, because here we're saying that the company acquired assets of 130. Okay, but I said that if we're using net plant and equipment, we should be careful. We should compute. If this was property, plant, and equipment at cost, then whatever difference here would be the correct value here. But since net plant and equipment is adjusted by depreciation, okay, let me show you again, right? Property, plant, and equipment, and then we subtract depreciation, okay, to get the net plant and equipment. So that's why we're not getting the correct cost. Okay. So Okay, easily you can you can determine what's the acquisition. Or let me let me teach you another way. Let me teach you a skill which we can use in Excel. Okay. So may I ask you, have you used the goal seek function in Excel before? Kindly chat, please, if yes. Goal seek. Kindly chat, please, if yes or no. Okay, good. Thank you. Thank you. All right. Thank you so much, class. So this is a good opportunity to learn. So let's make use of the goal seek function in Excel to solve for acquisition. Okay. Thank you so much for your feedback. All right. So if you take a look at the at your Excel, do you find here the tab data? Okay. If you click data, you will find in one of the ribbons here under forecast, you can find what if analysis. So click this. Okay. So let me wait for your chat. If you found what if analysis, under what if analysis, you have scenario manager, you have goal seek, and then you have data table. So let me wait for your response. Kindly chat, please, if you saw the goal seek under what if analysis. Goal seek. If you saw it, please chat yes. If you saw the goal seek, yes, good. Good, thank you. Good. All right, thank you so much. All right, so let's make use of that. Okay, what if analysis, another name for this is sensitivity analysis. So sensitivity analysis asks the question, what if? Okay, so that's the question being asked by sensitivity analysis. What if? Okay, so let's go here. What if analysis, and there are three tools here in Excel: scenario manager, goal seek, and data table. Let's use goal seek here. Okay, so these are the parameters that we need to, this is the dialog box for goal seek. You have three parameters here. First, you have set cell, and then you have to what value, and then by changing cell. Now notice here, set cell, you have this icon here. In your case, it might be a spreadsheet icon. In my case, it's an arrow, okay, or a spreadsheet icon. Now you see that these two cells, the set cell and the by changing cell, have icons here, either a spreadsheet or an arrow. This means that this should be linked to your model. Okay, on the other hand, to what value does not have a spreadsheet icon here, which means that the value here should be typed. We should type it. Okay, so set cell. What do we want to set, class? What are we setting? Take a look at our model here. So what do you think do you want to set? We want what particular cell to what, to a particular value. What's that? Any chat, please? What do we want to set? We want to set which one? Okay, thank you, Christine. Yes, we want to set PPE end, right? Okay, because our PPE end is not correct. Okay, so what we want to do is set cell, set this one. Okay, we want to set PPE and to be what value? Kindly chat, please. What value do we want it to be set? We want the set cell to be what value, class? Yeah, you're correct. We want it to be 1,000. Okay, so we have to type 1,000 here. Notice again, it's not linkable, so we have to type 1,000 here. And then by changing what cell? Okay, could you type here, class? What cell do you want to change? Anyone? In order to set that net PPE and to 1,000, what do we want to change in our formula? Okay. Thank you, Marian. That's okay. So what's that cell? That cell is the acquisition, which is, so we have to link this there. We have to link it to, in my case, it's P26. Okay. Let me control. Okay, let me just copy this for a while. Control Alt print screen. Okay. Oh, sorry. It should be by changing this cell. Control Alt print screen. There. Okay. All right. So notice that our model began computing. Okay, and we're correct. It's 230. The acquisition value is 230. Okay, Control D. I just copied this so that if I shared this file with you, okay, you know where the goal seek is coming from. Okay, let me pause for a while. Okay, we're able to follow, class. Is it clear? Is the goal seek function clear? I would appreciate any feedback from you. Yes, that's good. So actually, our problem is very simple, but it can be complicated, and the goal seek really comes in very, very handy. It's a very powerful tool. Okay, so for your notes, I send this if you want me to share this file, then you this is the goal sheet. So let's put here okay, let's put here note 1. Okay, computation for acquisition of PPE. Okay, all right, so we now need to change this. So this should be equal to, you get the negative of this because acquisition means an outflow. Okay, so now it's negative 230. And then perhaps we can, excuse me, we can put a comment here or a note. Okay, C note 1 for computation. Okay, let me add 1 decimal place here. Any questions so far, class? Is this clear? Any questions? Kindly please chat if so far clear yung computation natin ng investing, yung 230. Okay, good. Thank you. How about the others? Okay, good. Thank you so much, class. Thank you for your feedback. I really appreciate it. All right. So with that, can we now check if the balance is correct? Okay, take a look at the balance, guys. So we were now able to create a template which is correct because the balance of the activities here tally with that of the change in the cash flow. Okay, so let me just review that, what we have done so far, what we have done. When you're in the balance sheet, you're given the net plant and equipment. Okay, the difference will not be the correct change in cash. Okay, under investing for net plant and equipment. In fact, what should be done here, the 130 a while ago, we should have added back the depreciation, because in the net plant and equipment you remove depreciation. So to really get how much was invested in, you have to add back depreciation. And we were able to show that here. Okay, we were able to show the computation using the T account method in accounting, and here we have an investment of 230. if there was a disposal, only example, if there was, for example, information that 50,000 of the assets was disposed, then it should also be reflected there. Okay, so that the investment would now be, okay, so once again, we have to redo this. Okay, data, and then what if analysis, goal seek, set cell, this one, to what value, to 1000, by changing this cell. Okay, so if there was a disposal of 50, you would have subtracted that. Okay, and then the acquisition would be different. Okay, so but I just illustrated that, so let me go back to that. And then so this is 230. Okay, so this is the goal sheet that we did, and with that we now have the correct balance. Okay, and we can now construct our statement of cash flows. So let me, okay, so let me see where do we add our statement of cash flows. Okay, let's add it here, class. So let's now construct this formal statement of cash flows. What's the name of our company? Advanced Technologies. Okay. So here we will have two. Okay, let's begin with the end in mind. So this is the cash flow. This is provided because it's positive. So cash used because it's negative, and cash provided. So this is cash flow provided by operating activities, right? So this is operating activities. Just copy this, Control C. Okay. Cash flow provided by operating activities, 17,000. Cash flow used by investing activities, 230. And cash flow provided by financing activities. Provided because it's positive, used because it's negative. Okay, so let's write those three. Okay, cash flow provided by operating activities. Let me just copy this. So this should be cash flow used by investing activities, and cash flow provided provided by financing activities. All right, so we have these three activities now. So let me move the others first. Okay, so let's format this a bit. Let's put it in underline. All right, so we first start with the net income after tax, right? So let's just make use of the pro forma. Okay, here. And then we add So this is equal to okay. So we have here net cash flow. Okay, let me pause for a while. Let me allow you to write first. Okay, I'll give you a few seconds to follow along in writing. And once you're done, class, if you've reached up to this point, kindly chat in the chat box that you're yes, if you have completed it, so that I know if I can continue already. Okay, how about the rest? Let's give your classmates a few more seconds. Good, good, thank you. Okay, then let's let's continue the operations. For operations, that's why it's easy to do this because the activities are already here. Right? Here. So we now have this. So let's copy this. Oops, I missed out on this. Control C. Let me. Okay, so we have the following changes in your working capital. You can just copy this. Let's see, it might. Okay, I'll just link it. So the format is maintained. Okay. Once again, I'll give you a few seconds to copy what we wrote in the template. So that's why it's good to already put whether there's an increase or decrease in the templates. So when you're done with that class, kindly please chat so that I know if you're able to follow. So preparing the formal statement of cash flows becomes very easy because we have already done the parts. Your chat, please, guys. Okay, thank you. Let's wait for the others. So actually, we're just copying what we did in the template, right? Because we already have done the parts. So just copy the what we wrote. Okay, thank you so much. All right. So next, so we're done with the operating activities. So now we do the investing activities. Let's put an underline here also. So we can just copy this, the increase in your property, plant, and equipment. Okay. And then since there's only one, we're going to equate that to that one. Okay. So on this column, all the amounts here are, this is your operating, cash flow provided by operating. And then this is cash used by financing. And then lastly, so underline this again. We have the financing. Okay, let me check. Okay, so for the financing, let's copy paste the labels. So first we have this short-term investments, Control C. Okay, Control D, increase in short-term investments. And then this one. And then this one. And let me just so this is equal to Notes payable is 50. This is equal to 170. So underline this, then sum. Oops, wait. Is that correct? Yeah, okay. Maybe just to be consistent, get one decimal place. Okay, and then we add this sum. This is your net change in cash. Let me pause for a while and then allow you to construct your own statement of cash flows. Okay, and then once you're done, class, again, I request you to please chat if you're done. Okay, good. Thank you. So a few more seconds for the rest to follow. Yeah, good. All right. So that's good, class. Any questions so far? Are there any questions? Okay, no questions. All right, so let's finalize this. So this is the net change in cash. Then we add. So cash balance, January 1, 2021. The cash balance is equal to, let's get it here from our balance sheet. Cash balance is 80. Okay, therefore, cash balance too small. Okay, so that's the last two lines. After we get the net cash change in cash, then we add the cash balance on January 1, okay, to get the cash balance of December 31. So this figure should reflect the actual. What was the cash balance in January 1? And then, of course, that will lead us to the cash balance of December 31. Okay, so let me give you again a few minutes. Okay, good. Okay, thank you, Diana. And let's wait for the others. All right, good. Okay. Okay, so far, class, clear statement of cash flows. So this will appear in your next exams. So be sure you know how to construct the statement of cash flows. Right. Any questions? Or should I say, is it clear so far, class? Okay, good. Thank you. Okay. Thank you, class, for your feedback. Okay, let's continue and let's work down the line. Okay, and I'm checking the time because was it in this section that I overextended by about 15 minutes? Class, was it in this section last meeting? Because I got confused with the time. Was it in this class? And I failed to read one of the comments, which was reminding me that it was already time. Was it in this class? Hello? Ah, no. Okay. What class was that? We were supposed to end at wait. Okay. Anyway, sige. All right. So let's continue, class. Let's continue down the line and let's compute. There are some measures here that we're going to compute. First is NOWC, and then TOC, and then NOPAT, okay, and then FCF, ROIC. So quite a lot, no? Quite a lot. So let's start now. Hopefully we'll be able to finish all of this by next meeting. So I think it's best to start computing for these things. First is the measure on net operating working capital. Okay, net operating working capital. So let's have some definition of terms first. Okay, when we see the term working capital, oftentimes this is associated with your current assets. So that's our working capital. And when we see net working capital, That's your current assets minus your current liabilities. Okay. Net working capital is your current assets minus your current liabilities. Your working capital is your current assets. Now here you have net, but you have this descriptor, operating working capital. Okay, so this is your NOWC, and this is defined as your operating current assets minus operating current liabilities. Okay, here, operating current assets minus operating current liabilities. So let's examine our balance sheet, current assets and current liabilities. Okay, so these are our current assets. You have cash and cash equivalents, short-term investments, accounts receivable, and inventories. Okay, so we need to identify what our operating current assets here is. When we say operating current assets, it excludes anything that is interest-bearing. So cash and cash equivalents, yes, this is operating current assets. Okay, short-term investments. Let me check this. Check. Short-term investments is not. Okay, because this is interest-bearing. So this will not form part of your operating current assets. Accounts receivable is okay. Inventories is okay. So of the four here, only short-term investments is not part of your operating current assets. Okay. On the other hand, here, for your current liabilities, accounts payable is part of operating current liabilities, yes. Accruals is part of your operating current liabilities, but notes payable is not, because notes payable is interest-bearing. Okay, so because we know what the operating current assets and operating current liabilities are, we can now compute for the NOWC. Okay, so our operating current assets is just the sum of, okay, so we have cash, comma, okay, accounts receivable and inventories. So we're excluding short-term investments. Enter. All right, so this is 996.2. So we're summing up cash, okay, receivables and inventories. We excluded short-term investments, as we said, because it's not part of operating current assets. We can just actually copy this to the right. Okay, because this now, the arrangement such that 2020 is beside 2021, right? So there. Okay, and then for operating current liabilities, it will also be the sum. Let's add up. Okay, accounts payable and accruals, these two. Okay, excluding notes payable. All right, and then copy to the right. All right, now we can compute for NOWC, which is the difference between operating current assets minus operating current liabilities. There. Okay, let me pause again and request your feedback if you were able to follow, if you were able to compute for the net operating working capital for 2021 and for 2020. Okay, and let me allow you to follow. And if you're done, guys, kindly chat, please. Okay, thank you. Let's wait for the others. Okay. Right. I hope the others are able to follow along. Okay. So we have this net operating working capital. This means that management has been provided by this amount to work on operations. This is operating working capital, so 796.2, and it increased from 646 to 796.2. So this is the amount of funding that's used for the operations of the company. Okay, and then let's compute now for this is working capital, net operating working capital. We're interested to know the total operating capital, not only the working capital. So we add to the NOWC the net plant and equipment. Okay, so let's just copy here the NOWC and then the net plant and equipment to get it from the balance sheet. So we're using the net plant and equipment. Okay, and we can just sum this up out equal to enter, and then I'll just copy this to the right there. Okay, once again, guys, you know the drill. If you're done, kindly chat, please, so that I know if you are able to follow along. Okay, good. Thank you. Okay, good. Right, no questions. Let me check back my mga question here. All right, thank you so much, class. Okay, so overall, in totality, the management was provided with 1,796,000 capital for its operations. And in 2020, it was only 1,516. So there was what we call an increase, okay, an investment in TOC, which is the difference between the two, which is the next one we're computing. So in 2020, in 2021, the total operating capital became 1,796, while in 2020, it was 1,516. So all in all, the company invested, okay, 279.8 in total operating capital. Okay. Questions so far, class? Okay, clear so far? Do you have these figures? Okay, let's just delete this because it may cause confusion. Okay. Now let's compute for NOPAT. Okay, this is a very important measure. NOPAT is net operating profit after tax. Okay, so first let's ask the question, what's the difference between net income after tax and net operating profit after tax? Okay, let's distinguish between the two. So what we're doing here is, first, we know already net income after tax, actually. So let's just illustrate this. Let's go to the income statement and copy from EBIT. So our EBIT is this one. Okay, I'm just copying our interest expense is this one. All right. So our EBIT and then interest expense. So therefore, our earnings before tax is just the difference of the two. And then our tax is, let me just copy it from above. Our tax is this one, 58.7. Okay. Therefore, our net income after tax is the difference between the two. Okay. So this one I just reproduced plus. It is the same. It's the same as the one above. Net income after tax. Now the question is, what is NOPAT? Net operating profit after tax. Okay. So you notice for your NIAT, we have this. We deduct the interest expense. We deduct the interest expense. This one. Interest expense is to be deducted. Now, as far as NOPAT is concerned, since this is operating, okay, it should not involve the financing cost. Okay, because it's unfair for the operations of the firm to be charged with the interest when they do not have control over this. What if finance borrowed and there was a huge interest? So if we subtract the interest, for example, it's 1,000 here, then that will wipe out already the operating profit, right, class? If finance, for example, borrowed a big amount of money and the interest was at, let's say, 1 million, or this is 1,000. So already, EBIT less interest, we will already have a negative earnings before tax, right? Because of this high interest. So NOPAT is, we assess the performance of operations, okay? But we exclude this item, interest, because they don't have control over this. Okay, so let's show the computation of NOPAT. So here we still have your EBIT the same, okay, 238.4. However, for the interest, we're not going to charge operations with that. So this should be treated as zero. Okay, why? Because it's not operations that's responsible for the incurrence of interest expense. Okay, so we will evaluate, we will assess operations based on their performance and not on interest expense, which is not their which is not their responsibility. So this becomes now 283 minus 0. So our earnings before tax will be higher because we're not charging management with the interest expense incurred. Okay, so tax will be, so 283.8 times, I think we saved tax rate. Okay, here, tax rate, right? Tax rate is 30%, by the way, class. Where is that here? Did we use that before? Here, I think we gave this a name, 30%, the tax rate. All right, so therefore, this is our NIAT, this is our net income after tax. Our NOPAT is 283 minus 85.1, there. So our NOPAT is 198.7. And if there's interest expense, it will always be larger than your net income after tax. Okay, so you can see here that the difference, what's the difference between the two? 198.7 minus 137.1. Okay, question, why is it only 61.6? Okay, we did not deduct 88, class. We did not deduct 88 from NOPAT, right? Because we said that interest should not be charged to operations. Okay, however, the difference between them is 61.6. Okay, so why only 61.6, class? Why not 88? Answer, class? What's the discrepancy? We did not charge management with the interest expense. But why is it that the NOPAT is only higher than the NIAT by 61.6? What happened to the difference? You may raise your hand, you may unmute yourself, class. What do you think happened to the difference? You can see that there. Class? Anyone, please? Shouldn't the NOPAT be higher than the NIAT by also 88 by the interest expense? So wherein lies the difference, class? Hello. Okay, Marian, yes, please.
Sir, kasi po sa notepad po ay gumamit po tayo ng 30% tax rate.
Pareho silang 30%. This is also 30%. Kaso, ano? But you're correct. The difference. Yes, Marian, please. Marian. Ano yung tax ni NIAT? Mas malaki o mas maliit? Di ba mas maliit? By how much? Okay. But you're correct, Marian. It's about the tax, no? Yung tax ni NOPAT mas malaki, class. It was bigger. Kasi yung earnings, yung taxable rate natin dito mas malaki, no? To 83.8. Okay? So ang tax niya mas malaki. So what this tells us is that yung difference, yung interest, hindi lahat yan pupunta dun sa difference between NOPAT and NIAT. Okay? Such that the difference between NOPAT and NIAT will be equal to whatever the interest is. And then we multiply that by 1 minus tax rate. Okay? So if the tax rate is 30%, the difference will only be 70% lang. Okay? Ang difference lang ng NOPAT and NIAT will be 70% of the interest. So interest times 70%, assuming the tax rate is 30%. So the other 30% will go to tax savings for the use of the interest. No? So ito nga sinasabi natin, no? pag umuutang yung company, because of the interest expense, bumababa yung taxable income. So the taxable income is reduced, therefore the tax is reduced. So nagkakaroon tayo ng what we call tax savings with the use of debt, no? Sa paggamit ng utang, kasi pag gumagamit tayo ng utang, if we use debt, we have interest expense, and the interest expense will lower your taxable base. Okay? If we did not use debt, then the taxable base would be 283.8, and then we'll have a higher tax. Okay? So there's tax savings in using debt. But our focus now here is on NOPAT. Okay? So the NOPAT is higher than the net income after tax if the company uses debt, because we do not charge interest to the company, to the management, to operations. Okay, that's why it's higher, 198.7 versus 137.1. And of course, if you're management, if you're part of operations, you would want to be assessed based on this. Okay, you have a higher operating profit as compared to net income after tax. Okay, so is this clear, class? Any questions? Kindly chat, please, if clear so far. Okay, may I have just 1 minute, class? Let's just finish this. So this is another way to compute for your NOPAT. So for 2021, what was our EBIT? Let's copy this. For 2021, our EBIT was this one. Okay, and then we can just copy that to 220. And our tax rate is both equal to tax rate. Same thing for 2020. So our NOPAT will be equal to EBIT times your 1 minus your tax rate. So our NOPAT for 2021 was not 198. Our NOPAT for 2020 was 184. Okay. So we will stop here because next meeting we're going to do the rest. We're going to do free cash flow and etc. We're going to finish this particular worksheet. Okay. Kindly chat, please. So far, class, clear ba? Clear yung lesson natin? Okay. Last time I'm sorry. I think someone wanted to ask a question, but I accidentally ended the session. So sorry for that. If you have any questions, please feel free to remain and for clarifications of the lesson. Okay, so let me stop our recording now.